Hi, my name is Rahul Pal and I head the fixed income at Mahindra Mutual Fund. I'm going to speak a little about what happened in October in the debt markets and a bit about what our outlook for our outlook is on the debt markets. So it was a classical risk-on rally across the globe with equities and commodities doing well, and a classical risk-on rally reflects very poorly on risk-off assets, and globally you had a hardening of yields. In India, while the Reserve Bank of India cut the repo rates by 25 basis points and maintained an accommodative stance, the markets were not very much impressed. The sovereign bonds remained steady and was in a bit of a bearish mood. But the good thing was there was a sharp rally in corporate bonds. This was something that caught the markets by surprise, something that we had been alluding to, the fact that the credit spreads should compress. And the last month, the 5-year AAA corporate bond reduced by around 40 basis points, and the credit spreads shrunk by around 35 to 40 basis again. So making the AAA credits at a very normalized spread levels vis-a-vis the past. So the corporate bonds today at the current spreads are witnessing a gradual normalization and probably would take recourse to a mean reversion very soon. The liquidity was abundant and the short term remained on the lower bound. So what do we do from here on, or where do we go from here on? So where do we go from here on? At this moment, we are a bit hesitant in predicting a trajectory because there have been outstanding returns from the gilt markets of the sovereigns in the last 1 year. The outperformance has been substantial and we think it will consolidate at these levels. What we're also curiously looking at is how the commodity markets are behaving, and they seem to suggest, and if the US-China deal does go through, the commodities may take off from here on, which is basically, when commodities take off, it's a risk-on rally and which may not reflect good on the debt markets. While it may not affect the shorter end of the yield curve, we would be cautious on the sovereigns and the longer end of the credit curve. The caution is entirely due to a risk-on trade which is usually followed by a commodity rally. So the gilts may continue to consolidate and be in a bit of a bearish mode should the commodities rally. I start with the scheme-specific strategies. We start off with Mahindra Ultra Short Term Yojana, a scheme which we had closed, an NFO which we had closed during the last month. While the portfolio is in a building up mode, the month end we had an average maturity of close to 117 days. As we go on to construct the portfolio, we will be close to the upper end of the permitted maturity bucket, which is of 180 days. But this is as we go on to complete the portfolio. Mahindra Low Duration Bachat Yojana, the average maturity of the portfolio has fallen during the month and we are close to 290 odd days. We have tactically reduced some duration because of some sharp rally across the credit spectrum, and we will remain at this average maturity for some time in the foreseeable future. Mahindra Credit Risk Yojana, while the YTM of the portfolio has marginally declined through the month, we have seen some gains coming in through some part of the portfolios which reflected the shrinking spreads. The modified duration of the portfolio is close to 1.98. Going ahead, we may reduce the average maturity or the modified duration of the portfolio as we feel that the rates, or specifically the gilts, may consolidate at these levels, and there may be some risk-on trade which may adversely affect the gilts from here on. So we may take an opportunity to reduce our exposure to gilts in this portfolio. I'll talk about the debt portion of our hybrid schemes. Mahindra Dhan Sanchay Equity Savings Yojana. The modified duration of the portfolio is close to 4.5 with an almost equal allocation towards credits and gilts. Our strategy through the future will now be to move towards a gradual reduction of the portfolio modified duration through an equal reduction of both credits as well as gilts. Mahindra Hybrid Equity Nivesh Yojana, the debt portion. The modified duration of the portfolio is close to 3 and 3.5 with a tilt towards credits. This is a relatively conservative approach towards duration, and we will continue maintain this conservative duration through the month and for some foreseeable future till we see a change in the direction of the rates.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.